You cannot express your will onto the market. It doesn't work that way. It will slap you in the face every single time. So you need to be able to change sides. Yo, what's up traders? Hope you're all having a great time. It's Rafael here from the Genius Trading Team. And today we're going over a few charts. So yeah, just to talk about what we're gonna expect for the upcoming week. And I want to talk about a few habits that consistent traders have. So first of all, consistent traders, they realize that making money is more important than being right. So no matter how sure you are about your trading decisions, the market can do the exact opposite longer than you can be able to pay. So it's so important that you understand that making money is the goal. You cannot express your will onto the market. It doesn't work that way. It will slap you in the face every single time. So you need to be able to change sides. If you have your bias one way, but the market is telling you that you are wrong, that's okay. You have to switch sides and do what the market is telling you to do. You cannot tell the market what to do. It is the exact opposite. The market should tell you what you should do. And consistent traders, they realize that. They know that making money is more important than being right, and they are willing to change sides if the market tells them to do so. They don't sit in front of their computers in the morning, fire them up, and say, I think the market is going to do XYZ today. You know what they do? They wait and see what the market is going to do, and then they trade that. Don't try to tell the market what to do because it will always slap you in the face. So change sides. We all have feeling about what we think is gonna happen, but if you see the market doing the opposite of it, then trade the opposite of it. You don't try to inflict your will on the market. It doesn't work like that, okay? And another important thing is consistent traders, they use naked charts and focus on zones. Most of the traders I see that are wealthy, they don't use any indicators. Maybe they've got a couple of moving averages on there. Maybe if they're purely a Fibonacci or purely an Elliott wave trader, they will use just that. But rarely will they flip-flop and throw more stuff on the charts. If you're waiting for 9 things to line up and say it's time to trade, you will get maybe one trade every 10 years. And that's a long time to sit in front of your computer. And even then, there's a chance that it might not work out. So get used to watching price and price only. Get a feel for what you are trading. There are some traders out there that can trade something different every single day. My recommendation is to find one thing that you trade well. Just trade it with just price. For example, the Nas100 or the US30 or the USDCAD or whatever market you like. Get used to how that market reacts and maybe use one or two things that you feel comfortable with. Because the more you stuff you have on the chart, the more confusing it's gonna get, and it doesn't help you and it doesn't make you a better trader. And another important thing is you should always know exactly where you will exit for either a gain or a loss before you take the trade. You've got to know those points beforehand and have an objective reason why you're choosing those things. So never get into a trade if you don't know where you're getting out for a loss or a profit. Both of those numbers are very important, and a good trader knows them beforehand, always. Okay, now let's check US 100, the Nasdaq. Well, if we check in the 4-hour chart, first of all, we have a nice upward tension, okay? And then, of course, you can mark up a few zones where price was bouncing around, like this one, boom, 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 like this one or this one. touch over here, touch over here, couple of touches over here. Like just mark up some zones over here, okay? And then know that price probably gonna react to that zones, okay? So we check in the 4-hour chart, mark up some zones. So now all we have to see is what the market will do when the market opens. Like what is going to happen. Like the market can go up, bounce here, boom, bounce here, bounce here, bounce here, go this way, or it can go to the bottom, bounce to the upside, or it can go to the downside, keep going to the downside, keep going to the downside, or it can go to the upside, move to the upside. I mean, we don't know what the market is going to do, but we can just watch the market and see what it does. And then we can trade breakouts, or we can trade break and retests. I mean, just keep it simple, guys. Keep it very simple. You don't need to put a lot of things on your chart. You just gotta make a decision if you want to be a breakout trader, if you're looking for breakout patterns, if you want to trade breakouts, or if you want to trade break and retests as soon as you see that the market is rejecting a level, you know. And one more very important thing I want to talk about is cutting losses. Well, you need to understand that consistently profitable traders are very patient with winning trades and enormously impatient with losing trades. Okay, so most traders that are out there get into a winning trade, and what happens? They get extremely anxious. They want to get out of the winning trade because what's gonna happen if it goes into a loser? They start to get very impatient. They got that finger on the sell button because they don't want to see their winner turn into a loser. On the opposite side, if they've got a trade that is going against them, a lot of traders will say, you know what? I'm gonna wait just a little bit longer to see if this thing turns around. I mean, does that sound familiar to you? You probably have done that yourself. I know that I used to do that a lot. And wealthy traders turn that just completely on its head. They do the exact opposite. They are patient with the winning trades and give it time to work. And they are ridiculously impatient with losing trades. That means they are out immediately if it goes against them. As a trader, you need to be able to do what an average person cannot do. I mean, trading consistently profitable is against human nature. You need to know that. You need to get over this hurdle. And even with a hit rate, with an accuracy of just 30%, you could make a lot of money if you know how to cut losses quick and let winners run. I think there's a lot of people out there that think that consistent traders just have great trades every single time. And it's absolutely not true. They've got a lot of losers. In fact, they lose more than they win most of the time. But they are so crazy about cutting those losses that they are able to take kind of the randomness out of it and use it as the edge they have to make their winners do the work for them. Small losses, small wins, and big wins. This is what you should focus on. Alright, so let's go to the next chart. Let's check what's going on gold, on XAUUSD. This is gold. So what we have here is a fat ass consolidation. Market is moving sideways. Market already broke out of this trend channel that we have on the 4-hour chart. So the market can probably bounce over here and go to the support and resistance level over here, or the market can bounce again, or it can just break through it, keep bouncing around, just drop in, or I mean, we have all these zones marked up, and price will probably react to it, and all we have to do is later on check the lower time frames, like 30-minute chart, 15-minute chart, 5-minute chart, and see what price is doing around that area. Is the momentum slowing down? Do we get an engulfing candle to the opposite side of our trade? So maybe we should get out of the trade, or is it just consolidating and maybe breaking out to get to a lower low? Like, you have to really see what the price is doing, and you need to let the market tell you how to react to that. Okay, so your trading plan has to be able to tell you what to do, so that you always know what to do when the market is doing this or this. Like, if the market goes up to that price, I'ma do this. I'ma get out of a trade, or I enter the trade, or whatever. And you can use the candlesticks themselves to make some rules about your exits and entries. As soon as you understand this is a candle, I mean, this is just a candlestick game, guys. It is red candles against green candles, okay? Buyers against sellers. Every candle is a battle on that particular time frame, about who is in control of the market. And all you gotta do is read that candlesticks and, yeah, make your trading decision based on the candlesticks and on the structure that you see. Okay, so if the market shows signs of a rejection around in this area, and it starts, maybe you get an engulfing candlestick pattern or a reversal candlestick pattern to the downside, then you can trade this thing to the downside and see how far you can let this run. Or if it breaks through this level, you can trade the breakout and see when, and hold that trade just as long as it's printing green candles. And as soon as you see that the market turns around, as soon as you see that seller stepping into the game, depending on what time frame you're trading, like, you can wait for an engulfing candle or whatever, or a doji candle, or you can see that when the green candle's getting smaller, so the momentum is slowing down. And then you can make your trading decision based on what the candlesticks are telling you to do. Like, if you see that the market is turning around, you can get out, wait for the retest on that recent horizontal level, and then you can wait for another rejection around that level to move with the flow of the market. Like, if it starts bouncing here, you get some weak rejections, and you see maybe an engulfing candle that starts moving up again, then you hop on that train and ride this thing until you get the signal to the opposite side. You just have to read the candlesticks to understand what's going on and to make your trading decision based on that. Okay, like I said at the beginning of the video, consistent traders, they realize that making money is more important than being right. Okay, and they understand that the market can change sides, and they are willing to change sides if the market tells them to do so. So yeah, you really got to understand how these candlesticks work and how the structure works to get good entries, to have tight stop losses, okay, to just don't give back too much of your money. I mean, of course, you need to give the market some space when it comes to stops. And I really don't like using stop losses. Yeah, I don't like them because if I have a hard stop loss on my trades, and especially on the smaller time frames, then I show the broker where he can make money, like where he can make business. Okay, if I put my stop loss order into the market, the broker knows exactly where he can make money. Okay, so when I'm trading the smaller time frames, I like to not show the broker where I want to get out, and I want to close my trades manually. Okay, so as soon as I see, okay, I'm jumping on a buy on the 5-minute chart, and I see that now sellers stepping into the game, and they take control of the market, and I want to get out of it. Like, I don't want to hold that shit. I wait for another good entry and take the small loss. Yeah, just cut the losses quick. I just want to be in that trade if it starts moving, if it, and I want to get in on that trade as soon as it starts moving. If it doesn't, if it doesn't show me the moves that I want to see, then I don't want to hold that thing, you know. The longer you're in a trade, most of the time, the more money you are going to lose. Okay, and it happens to me a lot of times. I was holding trades for way too long, didn't didn't trade my stops. I was holding it and holding, hoping that the trade will come back to the direction where I wanted to have. Like I've lost a lot of money on good trades as well as on bad trades. Like you really need to understand the candlestick game and get used to it and make your trading decisions based on the candlesticks, okay? They have to tell you what to do. Mm, it's just a candlestick game, okay, guys? Keep it really simple. Now let's see what we got on USDCAD, guys. USDCAD, in my eyes, is in a consolidation as well. So what I would do is either wait for breakout to the upside. So price could go break through this level, so we can buy this thing here, see what it does here, maybe close it, or if it breaks out to the upside, we can trade the breakout to the upside. As long as we have green candles printing, it's all good. As soon as the opposite happens, we get out. Same thing over here. If market bounces here again, we could buy that thing. Like if we see prices bouncing here, we get a rejection, maybe engulfing candlestick pattern, we can buy this thing. Same thing over here. If we see that prices want to bounce here again, we can sell this thing. Or if we see prices breaking through this level, we can trade the breakout. We can trade the breakout as long as it keeps printing red candles. We can hold that trade. As soon as buyers stepping in, we get out of it. Then we can wait. Of course, we can wait for the retest of that level, and then maybe if we can see rejection over here, maybe an engulfing candlestick, a red fat as red candlestick, we can get in again, trade this thing to the downside, and see maybe we can hold it, and it breaks through that level, and we see how far we can let it run. I mean, you have to really give the market the chance to fill your pocket with a fat ass move. And if you got a good trade, you gotta be patient with it and see that and try to get the maximum out of it. But there's no right or wrong how to manage a good trade, you know. It is, yeah, you have to gain some experience and find your own way, set up some rules that you will follow every time. Okay? Of course, if you can give back some money if you're too patient with a good run. If you give him too much space, you probably end up on the side that you're going to end up in break even or a small loss, when you're too patient with some of these with some of the good trades. But yeah, you gotta really make your own experience and find a way how to handle these good trades as well as the bad trades. One more tip I can give you if it comes to cutting your losses quickly. What I like to do on the smaller time frames is if I step into the game, I really wait until I see, okay, the market starts moving into my favor. And if it starts moving into my favor, I'm I'm looking for the market to really move into my favor. And if it doesn't do that, if it comes back, and if the seller's taking control of the market, like if it starts printing the opposite color of candles, like if I'm buying the market, and it starts printing a red candle, and it's a red engulfing candle that takes takes out the candle where I've entered in, then it looks like the sellers are in control of the market, and I don't want to hold that thing, you know. So I will close it and wait for another good entry and see if I can get another good entry, or maybe to the opposite side as well. Like if the market's showing me that a break of structure and I see, okay, the market is turning around, then I'm looking to get a good entry in to the opposite direction, you know. And yeah, just learn how to read the candlesticks and make your trading decision based on that, guys. I really don't need to give you like a weekly analysis about what is going to happen. I mean, we really, as a good trader, you really need to understand that it goes either up or down, and you gotta mark these levels where price is bouncing around at most of the time, so you know where sellers or buyers are lining up. And then you just gotta wait patiently and wait for your move. Wait until the market moves and wait until the market does what you're waiting for, and then step into the game. And if it does what you want to do, then you can load that shit up, okay? As long as it prints your candle color, as long as it moves in your favor, you can load that shit up. And as soon as you see the opposite side stepping into the game, you should better get out of that shit and wait for another good entry, or just finish your trading day with a nice profit, you know. So yeah, keep your losses small, guys, and bank big on your good trades. Like, don't be shy to load that shit up. If it moves in your favor, load that shit up and see if it smashed your profit target. Close some of your position, like close 80% of your position, and see if you can maybe get to another high or another low, and try to trail that trade. You know, move your stop, move your stop in mind. Or if you're trading the bigger time frames because you don't have that much time to trade, then just move your stop. Like if you trade in the bigger time frames, you have to have a hard stop loss. If you trade in lower time frames, I recommend you to not use stop losses, because the brokers will hunt them. They will hunt them because they want to make business. And if you don't show them where they can make business, then you'll probably be able to make a lot more money and not getting stopped out too quick on good trades. And that's it, guys. I wish you a profitable trading week. And yeah, I hope that you can smash it, and I'm sure this video will help you to smash it. I'm gonna grab some pizza now. Like nearly every day, man. I'm in love with pizza, guys. Yeah, have a great evening, guys. Peace out. Much love. Every time when my body